Ever feel like the financial world is just, I don't know, constantly screaming at you?
Oh, definitely.
New trend, get in now, don't miss out. And you're just standing there thinking, is everyone else on a yacht and I'm just treading water?
Mm-hmm. That specific feeling, yeah.
That's pretty much the heart of what we're diving into today.
Yeah, that sense of pressure,
Yeah.
seeing what looks like success everywhere and comparing yourself. It's incredibly common in finance right now.
Right.
And it fuels a certain kind of behavior the source material we're looking at really tackles head on.
Exactly. So our mission in this deep dive is to take the source you shared this article, financial FOMO, stop comparing your wallet to their yacht, and really dig in.
Okay.
Pull out the most important ideas, maybe some surprising facts, and just help you cut through the noise, find some clarity, maybe a few aha moments.
Sounds good. And the article, it gets right to it, spotlighting that core problem. Financial FOMO,
Yeah.
that fear of missing out. It drives us to compare our own situation to others, often, people who are only showing the highlight reel.
Okay, so let's unpack this FOMO trap then, because the source makes a really strong point about the consequences.
It really does. The central idea here is that chasing trends because of that fear, just because you see others doing it or hear about big, fast wins, well, that's a direct path to making bad financial decisions.
It's reactive.
Completely reactive, not strategic at all.
You see the headlines or, what someone's posting online, and you just feel that impulse to jump in without really thinking it through.
Yep.
So what does the source offer as the antidote to that?
It really boils down to discipline and focus.
Mm-hmm.
The article hammers home staying anchored to your own financial strategy.
Your own plan.
Exactly. Deliberately avoiding the hype cycles that trigger that FOMO and using discipline for, long-term wealth building. It frames it as your plan versus what you think everyone else is doing.
That completely flips the script, doesn't it? Instead of reacting to the outside noise, you're building from your own solid foundation. And the source then looks at some really foundational concepts you need for that long-term strategy. Starts with something pretty much everyone uses, credit cards.
Right, and the article presents let's say, a nuanced view. It highlights their dual nature. They can absolutely be a friend,
Okay.
essential for building credit history, earning rewards, if used responsibly.
But the foe side, that's where it gets tricky, right?
Critically so. The source warns they can easily become a foe if you misuse them. That can lead pretty quickly, actually, in debt spirals.
Ooh.
So the message is sharp. You have to understand the risks and use them wisely. They are definitely not a source of free money, ever.
A powerful tool, but one that demands respect. Okay, so moving from something that needs caution to something the source really champions as a positive force for long-term growth, compounding.
Yes, this is described as just a fundamental, really powerful concept. The article's emphasis is on the magic that happens when you start investing early.
Even small amounts.
Yeah, even small amounts, and just let compounding do the heavy lifting over time.
The source really stresses that patience is like the secret ingredient here. It's not about striking it rich overnight.
Not at all.
It's about consistent growth, reinvesting returns, letting your money basically make money on itself.
Which, if you think about it, is the complete opposite energy of that FOMO trap we were just talking about.
That's a great point.
Compounding is this slow burn, the patient, long-term game. FOMO is all about the immediate, often, fleeting opportunities.
It ties together nicely. Okay, the source also explores a couple of different avenues people might think about for income or investment. Paints quite different pictures, though. First up, affiliate marketing.
Right. This is presented as one potential way to earn passive income. The article has a great phrase for it, calls it a low-key side hustle superhero.
Huh! I like that. Low-key side hustle superhero. But the source does temper that a bit, doesn't it? It's not just push a button easy.
Exactly. The article points out that, getting success, building a real income stream takes patience. It takes consistent effort.
Okay.
You actually need to create valuable content that attracts people, makes the affiliate links relevant, not just, spamming links everywhere.
Good clarification. Makes sense. So, on the flip side, the source looks at house flipping. Now, this feels like it sits maybe on the riskier end of things.
It certainly does, based on this article. It states that flipping houses can be profitable, sure, but it also explicitly calls it a pitfall.
A pitfall. Okay, why the strong word? What risks does the source flag?
Well, it lists the big ones, unexpected repairs, and anyone who's done renovations knows those surprises can bite deep.
Oh, yeah.
And market changes. The market can turn, suddenly making a property worth less than you thought.
Right.
The advice seems to be go in with your eyes wide open. Know the pros and the cons really thoroughly. It's presented as a very competitive space.
So both need real effort and you need to be aware of the downsides. But the scale of like potential loss seems much higher with flipping, just based on how the source frames it.
Seems that way, yeah.
Okay, now the article takes a bit of a turn. Uses pop culture, a movie to drive home a lesson.
Yes, it brings up Wall Street. Money never sleeps.
The sequel.
Yeah.
Why bring that movie into a discussion about personal finance and FOMO?
Well, it uses it as a kind of cautionary tale,
Yeah.
a dramatic reminder of how these high-stakes games on Wall Street, there's sometimes questionable ethics,
Mm-hmm.
can have huge ripple effects, impacting whole economies. It specifically links it to the backdrop of the 2008 financial crisis.
Right, I remember. The article mentions Gordon Gekko is back, giving warnings, but also, being Gordon Gekko.
Well, yes.
And there's a young trader getting a sort of harsh education.
Exactly. The source highlights those themes.
Yeah.
Power plays, backstabbing, and that really hard lesson the young guy learns about being careful who you trust. Especially, billionaires in high finance.
Definitely sounds cautionary.
It's framed as a world where things aren't always what they seem on the surface.
And the source pulls a very specific kind of actionable lesson from this movie reference, doesn't it?
It does. The core takeaway reinforced by the article is just timeless financial advice, really. If an investment sounds too good to be true, impossibly good or easy.
It probably is.
It almost certainly is. And it adds that vivid image. If someone offers you a golden handshake, metaphorically, right?
Yeah.
You better check if it's poisoned.
Wow, okay.
Basically, be inherently skeptical of deals promising the moon with no obvious risk.
That's a memorable warning. And the source's hot take on the movie itself, any good?
Well, it acknowledges it might not be as, iconic as the original Wall Street,
Sure.
but the article feels it still serves its purpose. It underscores that money never sleeps, meaning the financial world is always churning,
Right.
but also that fortunes can just vanish incredibly fast in a crash, like we saw in 2008.
A stark reminder. Even the biggest players aren't immune. Speaking of scale, the source includes a truly surprising did you know fact, puts modern wealth in perspective.
This one really stopped me too. The article points out that Apple, just one company, is worth more than the entire economies of most countries on Earth.
Wow, just let that sink in. It frames this around the kind of mind-boggling reality of a company's value surpassing sovereign nations
Yeah.
and compares the economic clout of, say, a tech CEO versus a president.
It's an incredible illustration of just how much financial value can be concentrated now in successful global companies. It really sharpens the scale of the financial world the source is trying to navigate.
Okay, so from that truly massive scale, the source brings it right back down to earth, gives a personal, very specific example, calls it a crypto story.
Yeah, this is shared as a real, tangible example of someone navigating a specific, maybe more volatile financial niche. It details a personal outcome from trading options on a cryptocurrency.
And the result was pretty concrete, $117.20 in extra pocket money, is that right? From selling puts on ETH.
That's the specific number the article reports, yeah.
Yeah.
The activity was selling puts on ETH. That's Ethereum.
Okay.
Happened on a platform called Deribit. And the options, they closed out at 100% profit on their expiry date.
All right, let's walk through what that means based on the article's explanation. For someone who might be curious but isn't, deep in the crypto stuff, selling a put option on ETH. What's
Yeah.
the basic idea?
Okay, so as the source explains it, when you sell a put option on ETH, you get paid a premium up front. That's the initial income part of that $117.20.
Gotcha.
And you get that premium because you're basically betting that the price of Ethereum will stay above a specific price, the strike price, by a certain date.
The expiry date.
Exactly. The strike price is the price the buyer of the put could force you to buy ETH at if the price drops below it before expiry.
Okay, so you get paid for taking on the risk, the obligation, to buy if the price falls significantly.
Precisely. And P in the story just stands for put option. The article adds a nice touch, too, mentioning the personal journey involved. Going from being jittery
Understandable.
to actually getting the hang of it with practice.
It's a really specific, granular example, shows one way someone learned to navigate a particular corner of the financial world.
Mm-hmm.
I guess the source uses it to show there are loads of different paths and strategies out there, right? And exploring them means, well, learning the specifics.
And patience, again, even in faster markets, it seems like that getting the hang of it part implies.
Yeah, that theme keeps coming back.
Yeah.
Which brings us neatly to the concluding section. Take this with you. How does the article kind of wrap all these different threads together?
It loops back to the big lessons, really. The absolute necessity of resisting that FOMO trap, that external pressure, the balancing act you need with tools like credit cards, and acknowledging that ventures like house flipping, well, they're journeys with real risks.
And it reinforces the good stuff, too, the positive tools.
Definitely. It reiterates that compounding is arguably your most powerful ally for building wealth steadily over the long haul.
The slow burn.
The slow burn.
Yeah.
And it holds up affiliate marketing again, that low-key side hustle superhero, but stresses again, it needs consistent effort.
Okay, so what's the article's big overarching message then about the path to financial well-being, bringing it all home?
It really emphasizes taking deliberate steps, often small steps. It warns strongly against chasing those tempting shortcuts.
Right.
Whether that's reacting to FOMO or jumping into risky things you don't fully understand, it's about making each choice count towards your own strategy.
And there's a note about mindset, too, which feels important, given how stressful finance can feel sometimes.
Yeah, the article encourages not taking it all too seriously, actually. Find some humor in it.
Okay.
It doesn't have to be all doom and gloom. The goal isn't just the next big win for its own sake, but finding your path and, ideally doing it with a smile.
So, wow, we've really covered a diverse landscape in this deep dive, all guided by that one source article. From the psychological battle against FOMO
Yeah.
to understanding core tools like credit cards, the quiet power of compounding, then exploring really different avenues like affiliate marketing and house flipping, drawing lessons from Wall Street drama, seeing the sheer scale of modern wealth with Apple, and even getting that specific peek into crypto options.
It really highlights just how many different strategies, risks, and, frankly, mindsets exist in the financial world.
Yeah.
Underscores the source's point that there's no single easy path, especially if you're constantly comparing yourself to others.
It definitely gives you a lot to think about. So here's maybe a final thought to leave you with. Given all these different approaches we've touched on, from the steady, patient building with compounding to potentially faster, higher risk things like flipping or options trading, and that constant background hum of comparison driving FOMO, what does building financial well-being truly mean to you personally, beyond just chasing the next headline or that perceived big win?